the markets in the pre-market are unchanged. Now, on Friday, I think that the action in the one day when the tariffs were announced, the market really dove. I mean, it dove like 1.6%, and it was having a very good day. So the tariffs, I think, were a bad news item, which is, hey, wait a second. Tariffs mean a lot of things. One, it could be inflationary if people are paying more money. That could be inflationary, and it could also be slow down commerce. Like, hey, well, I'm going to wait to buy those materials I'm buying from a foreign source, and hopefully in a year, the tariffs are gone. This is a temporary thing that the governments need to come to an agreement on some issue. Once that agreement's reached, the tariffs go away, and then I save my company money. So it could have a negative effect on commerce. So the GDP might slow down a little bit. You have more inflation. I would also combine it with, in the U.S., egg prices. Egg prices have come into the picture a few times over the last 5 years. And right now, egg prices are very expensive. And Americans like eating chicken eggs. Okay, they like eggs for breakfast, and it's something that's kind of a staple of families. Cook with eggs, cook breakfast. They bake goods with eggs in them, and a dozen eggs is $10 to $15 right now. Each egg is, let's call it $1.25 per egg. So to make breakfast is just for the egg ingredient is like $2.50. And I think that's really hard on the consumer. And it's a clear signal to the consumer that, okay, inflation's still here. And I think that might be a cloud of negativity that's going to exist with the economy. So the tariffs are going to drive a perception, negative perception of, hey, prices are going to probably go up, combined with some prices like eggs. That's a big issue. Eggs were like one of the examples when we had really bad inflation. Eggs were about the price that we're seeing right now. And it really had an emotional impact on the American psyche. People were like, oh my God, things are terrible. I go to the grocery store, I buy eggs. I mean, that's a story in my family community. That's the story. My cousin, he bought eggs and he had to pay $15 for a dozen. I visited my mom, who's 89. She found a source where eggs were $9 a dozen. And FYI, where were egg prices when we didn't have inflation? $2.50, $3. So this jump is not like, oh, they're up 10%. No, it's like 3 times the typical cost. So it's a really big impact. My mom found a place that had them for like $8.50. So she bought 4 dozen, and she bought a dozen for me, a dozen for my sister. So she started to hoard it. And so you see this behavior, and I'm like, hey, this is what was going on like 2-3 years ago when we had this horrible inflation. Okay. So my point of view, my perspective on the stock market, and then I'll hit on crypto after we get done with stocks, is the tariff war. If it's short-lived, like we have a bad week, not anything to worry about. If we have a prolonged tariff war of 6 to 12 months, that's going to impact the economy, and it's going to impact stocks, and it's going to potentially make us feel, the consumer, 70% of the U.S. economy is the consumer spending money. And if that consumer says, I'm going to lower my expenses, I'm going to watch what I spend on, it really impacts a lot of businesses. And I think it's going to have an impact on stocks. That's what I believe impacted stock prices. And if the narrative doesn't change, because over the weekend, the storylines we're hearing is like U.S. put tariffs on Canada and Mexico. And Canada responded quite with a posture of strength and, hey, we're not gonna bend on this one. They put tariffs on our products. I think they have a prime minister there. He was trying to speak to the American public because we have a very positive relationship with Canada. And I think in general, we have a positive relationship with Mexico, but there's some tension there because there's a lot of illegal immigration coming from Mexico. A lot of drug trade goes through Mexico. And I think there's those undesirables. But with Canada, it's a very positive relationship. And his comments, I think, are probably going to be a debate that is going to be in the American psyche. And I think that's going to be a cloud of negativity for as long as it lasts, because they're putting tariffs on our products. They're also he's encouraging Canadians not to travel to the States. And it's going to be a little tick for tat. And that's how our current president in the U.S., that's how he operates. We knew that. He got voted in. He's the guy with the job, so he's going to do the job. Go ahead, Scott.
Yeah, I was just thinking, all those people who started keeping chickens in their backyard must be feeling pretty smart right now. Maybe they're making money. I'm sure we all know some.
I have a cousin in Arizona, in Tucson, Arizona, and he's a school teacher. And they had a project at school where they hatched eggs, right? They incubated eggs, and then they hatched them as a project for the kids. The next thing you know, he had 10 little chicks. So he's kept these chicks, and now they're chickens and they lay eggs. The long story short is, hey, those chickens are, more than paying their feed right now.
Yeah, no joke. Do you know if it's all North America? Like, is it Mexico and Canada too that are having this issue? Or is it just the US? Because I had a friend who was visiting, and he said it seems to be with the avian flu.
Correct.
That is a big part of it.
Yeah, I don't know if Canada and Mexico are dealing with this, but I know the US dealt with it. Months ago, there was a virus that the chickens had. They had to destroy like 60% of the chicken population. So it just decimated the supply of eggs. And that's what's causing the shortage. So you think about McDonald's, right? McDonald's breakfast, they're buying eggs in massive quantity. And you think about, other industries that have eggs as an input. That's just a very, very high cost to be dealing with. It tripled in cost, and almost overnight. It was like just a couple months ago, they were $3.50. And now, boom, they're $10. And they limit, you can only buy 2 dozen.
Egg control.
Yeah, we buy a dozen. We're not like egg. We don't eat. If I didn't eat eggs for a whole week, I would be like, no problem. There's a lot of substitutes to it. I don't eat eggs naturally that often, but I do notice the price of them, because that's one of the things that I usually get sent to the grocery store. Hey, we're out of this, we're out of that. Usually it's like, hey, we're out of eggs. Pick up a dozen eggs. So I go there and I'm like, I look at the shelf. I don't know how to buy eggs. And I look at price and I look at packaging. I'm like, oh, these look good. $4. Right, put them in the basket, pay, and leave. All right. So how does what's going on affect crypto? So again, just my opinion here is crypto is a confidence. It goes up or down with confidence. If there's bullish confidence, like, wow, man, things are really looking up and stocks are really going to rally, Bitcoin's going to rally. If it's you know what, we got some problems ahead. We got the Prime Minister of Canada, putting out a certain, message that is getting into the mindset of Americans. Americans are dealing with high, egg prices. They're dealing with, there's also like, I don't know that we're in a bad economy, but we're not in a great economy. It's not like, wow, man, we're just doing great. We're kind of in between. It's like, well, it's not bad, but it's not great. And I think that a couple of negative stories can make us feel bad as a kind of the general consumer. Having said that, Bitcoin, Ethereum, Cardano, Solana, it's going to move with the confidence level of the consumer, and that's where it's going to go. So that's what I think is affecting stock prices. Now, the other thing too that I, if anything, just keep an eye on is, so the Dow did well, I think, year to date. Yeah, the Dow's up close to 5%. And the Dow, for 2024 was up like 14%. So it had a really good month. The S&P, not so much. But we had a really nice rotation. And if you look at, like, I think this one will give me the best view. Yeah. So if you look at like communication services, up 9.44%, healthcare up 7%, financials up close to 7%. That's a great month. That's like, wow, that's awesome. So some of these stock losses, I think, are a little bit of, I'm already thinking I want to build up cash. Why? Because it's a great month. And if I sell out of some of positions and sell some of my shares of some companies, I kind of bank some of this gain because I did about 9% for the month, 9% return. It's like, wow, that's not going to happen all that often. So maybe some other investors are thinking the same way, which is, well, it was a great 24, great 23. January was phenomenal. I'm going to take some more money off the table and keep it around in cash. Cash is paying 4%. Bonds are paying 4.5%. They're not going to go down anytime soon. So maybe some of that behavior too is coming into the picture and causing stock prices to fall. So we're in for a little volatility. We'll see where it goes. Any last thoughts?
Victor, if you don't mind, just to finish my thought with the more serious note. So for me, uncertainty is always something I come back to. Now, it's not the only factor, right? Like you're saying, there's other specific things like the tariffs that are more certain. But anytime there's uncertainty, like for example, right? And I'm not trying to get political. It's just what Trump has been saying about Greenland and other things, and about what he would like the political status of Canada to be, et cetera. You know what I mean?
Mm-hmm.
Like even if it's bluster, it adds uncertainty, right? Because people are like, well, what if, right? And so that's just an example. But
I agree with you. If you have uncertainty and you have a couple of variables that show negativity, I'm right there with you. And it's one of the things as a investor and basically a citizen of the US that I found to be incredibly interesting is how quickly perception and attitude and sentiment changes. Like literally you could have a month where it's like, man, things are looking bad. We got this problem. We got this thing going on. And then a month later, you're like, wow, things are looking up. It's like, wait, the data didn't change all that much, but it just seems like a couple of things could make people worried. And then those couple of things maybe fade in interest level, and a couple of positive things enter the mindset, and then things are better again. Markets are very at times emotional. Like Monday's sell-off, right? DeepSeek, the story came out, and slam, NVIDIA was down 17%, and a bunch of other stocks were down big time. Then the next day they pulled back up. It's like that's irrational. It's very overreaction in some ways, and that's always been interesting to me. But it's here to stay. All right, so we're going to get started with individual stocks, and the first one we'll talk about is Atkore, and they engage in the manufacture and sale of electrical, mechanical, safety, and infrastructure products in the United States and internationally. They offer metal, electrical conduit, fittings, plastic pipe, conduit, electric cable. So these guys probably do well if there's things being constructed, if there's a lot of demand on their product. They've seen a really hard pullback in their stock. Man, 48% downturn in their stock. Now, they had been on a really nice rise. Man, look at that beautiful rise. But more recently, they pulled back to the stock price that they were selling at in 2021. This is a small cap stock. It's $2.8 billion in market cap. Revenue is above that, $3.2 billion. PE is really low, 9.7. Incredible. Dividend is 1.5. Analysts think it's discounted. Okay, so take a look at the revenue. What's going on? So the revenue has been dropping. Okay. Wow, it's consistently been dropping for 8 to 10 quarters. Now they were booming in 21, 22. I'm curious to understand what are their principal markets, right? Are they building out big infrastructure? Are they doing? So these are the products they have. Here are the markets they serve. So probably some of the enthusiasm behind the product is they do have a data center telecom segment. And of course, anything that says AI data center has been receiving a lot of investment. So that might be part of what's been really exciting for investors. Solar, and I think solar continues to grow. So in California, we use quite a bit of solar, and I have solar on our home, and businesses have solar. I think it's a good idea. Well, I went to Arizona. Arizona is a desert, and there's a lot of sun. There was a lot of solar where I went. I'm glad because I think it's a good idea. And there was solar everywhere. So that's not a bad segment. Commercial and industrial. Now, commercial as it relates to office space is probably doing poorly, but industrial like warehousing is probably doing well. And utilities, you'd think they're doing well because utilities are supposed to be building out at a very aggressive pace. Okay, so those are the markets that these guys depend on. This is a concern where, okay, the revenue is down quarterly. Okay, quarterly they're down. At a certain point, they're going to make the turn, right? They're going to be like, okay, we're going to start growing again. This past quarter, they were down 9.38%. Again, it's been a consistent drop in revenue, right? So the stock dropping is rational. Like, okay, if revenue is coming down, that means fewer projects, fewer products are being sold. Maybe because this is a product that once you lay down, particular electrical, you don't have to touch it for decades, right? Like the electrical in this home was built in 1960. So we're at 2025. So over the course of 65 years, the electric wire that's in these walls, other than the stuff that I've added, like they didn't have, like I have networking cables in here. I added 500 square feet. That stuff's newer, but everything else has been here. So this stuff doesn't have to be replaced all that often. So they are going to be dependent on growth of data centers, growth of housing, and growth of industrial. And it looks like they've been hitting a really good downturn. Higher interest rates might be affecting the amount of construction that's happening. So that one there is a concern. They announced, I think you mentioned that they're going to be announcing on the 4th, which is Tuesday. And I think if they show growth, this stock's probably going to move. And if they show growth and guide and say, hey, we're going to start growing now. We've had, a solid period of time where we were not growing, and here are the reasons for it. They did grow substantially here, right? So maybe everybody bought what they needed in 2021, 2022, and then there was a lack of demand. So that earnings call will either keep the stock price where it's at, or maybe even drop a little lower. If they're like, yeah, we're still not growing, we're not quite sure where we're going to grow, stock price is going to keep dropping. But if they're like, hey, we are making the turn, we are optimistic about 2025, here are the reasons for it, stock may rally a little bit, and it might give an investor enough to want to start a position in it. I have no idea what they're going to announce. And if somebody else knew, obviously that's information that would be very valuable. On cash flow. So with the lack of revenue, it really affected cash flow. You can see that cash flow really followed that top line revenue. It really grew in 21, 22, and then it dropped. So that is all rational. This is all like logical, rational. Profit margin of 14.5, and that's net profit margin, not gross. 33% gross. So you see how their profit margins have dropped with the lack of volume. It looks like they had pricing power in 21, 22. Now they're having to discount their product quite a bit. So they are feeling it. This business is feeling the tension of just not enough demand. This is a wait and see stock for me. Like, I need to hear this earnings. I need to understand what comes out. Have they made the turn? Are they continue to see this really bad recession within their industry take place? What are the things that are going to make this stock work? And now their dividend is quite low, and it might be because their stock price did double over the last 5 years. That could be part of it. This is an industrial.
The dividend. The dividend. They just initiated the dividend like 2 quarters ago, so it's quite new.
Uh-huh. Okay.
But they are doing impressive buyback. If you look at the share count.
Okay. That's smart. It's smart on their part. Okay, analyst. So for 2025, which this fiscal year will end September 30th, 2025, analysts are still expecting the company is going to continue to contract. And okay, now this is what analysts are predicting. It's not what the company's saying. So if this changed to green, the stock can begin to work. You can see their profitability is dropping as well, 32%. So these numbers look, so the stock price dropping 48%, it's all logical. It's like, okay, their fundamentals have dropped. the company isn't selling as much. They're not making as much profit. Their prices are going down. The stock should be dropping. There's no irrational element there. The PE being down, yeah, it's down because you're dropping revenue. A business that's losing revenue, this is a sign that their product isn't in demand. Maybe their product isn't as competitive as it should be. Maybe there's a competitor out there that's selling the same product for a lower price, a better product for a better price. All those things could be in the picture. Once they start growing, and they're not supposed to grow all that great. So this one here is, I think it's a complete pass for me. There's just the investment of time, energy, focus, I don't think is going to be rewarded. I think these guys had a great run, and now the stock price has really fallen. But I'm not seeing the stock price being in recovery mode soon. Let me double check one more factor. So their free cash flow is dropping, right? So it's 400. So 400. Yeah, I mean, you could say they're discounted if their balance sheet's really healthy. So balance sheet, they have a okay debt, not too bad. It's 600 million in net debt. Yeah, I think they're fairly priced. Maybe, yeah, they're fairly priced, maybe a little bit discounted, but not worth the risk for me. It's like this stock can continue to drop. I think it's not, they don't have an exciting future ahead of them. It's not like, hey, we're going to start growing at 20% in a year from now because we got this new product that's coming out. It's going to be awesome. No, it's like, oh, when things recover, we're going to be growing at 4 or 2%. It's like, okay, that's not exciting. Even at that growth rate, I value them at like 4 billion, and that would be about a 30% discount if they started growing. And that's the if, right? They have to announce and tell us what's going on. So that's Atcor. Any last comments on that, Kiter?
Thank you.
All right. Let's talk about Lam Research and then PAGS. And Lam Research, I've been tracking because that's one of the stocks today I bought into. Year to date, it's up nicely, 12%. It's seen really good extreme volatility. It just up, down, but it had a nice 5-day, I think. Yeah, well, sort of. You see, it's only 1.7, but the stock jumped. I think it was on Thursday's trading. It jumped like 7-8%. It was really nice to see because they had very solid earnings. Very solid. They're showing nice growth, 16% growth. And that was in combination with ASML, had a positive earnings. So what they're showing is that, semiconductors, and of course the semiconductors that are getting a lot of attention are the, most expensive ones from NVIDIA. And NVIDIA charges like $30,000 to $60,000 per unit. That's a lot of money. While a car has, 50 to 100 different chips, right? Like Scott bought a new car. His car probably has 100 chips because it's electric. Some of these chips are like $1, $5, $10, right? It's not like $30,000. So Lam Research, they're providing the machinery and the materials, whether that company that, downstream like TSM is manufacturing $10 chips or $30 chips, $30,000 chips. So that volume is what is going to make Lam and ASML make their demand go to the positive. So that's what they cited, is they have good growth in volumes. And I think, did somebody have a question?
I accidentally hit the raise hand.
No
I meant to put thumbs up.
So Lam showed good numbers and they have a good forecast. That was very good. The other fundamentals that I saw even before the earnings were good. Their free cash flow is recovering. We'll take a look at the quarterly in a second. Gross margin of 47% looks good. So they're growing. Now let's take a look at the free cash flow. And that is quarterly, sorry. Let me look at the annual. So free cash flow annually right there at 4 billion. Man, that's a good number. So Lam Research had a good earnings. When we look at the stock over the past year, they were really sold off, right? They were sold off, and I thought discounted nicely. boy, there's a lot of volatility in the semiconductor space right now. It goes up and down. But this one I thought was discounted. Even though over the 1 year you're kind of close to even, although you lost a little money if you invested a year ago. When I look at the value of this stock, I still think the stock, based on the most current stock price, is discounted by 20%. And I think I'm up on the stock like 10% in a short period of time. So it's been a good stock. Go ahead, Scott.
So I just was curious if you've also looked into KLA, which used to be known as KLA Tencor, but I guess that's one of the main competitors. And it's just be interesting comparison to me because their stock has, I mean, if you look at even a 5 year, it's just been up and to the right for the most part. I mean, I have a suspicion maybe they're not undervalued. Maybe they're more fairly priced.
When I looked at Lam, and I looked at ASML, and I thought Lam provided a better proposition to me, and so I started buying into it. But let's take a look at KLA, see what they've got. So this is where I'm at. It's based on free cash flow and their earnings per share. I'm gonna, it's risen. I think it's going in the right direction. If we see some volatility, meaning like all these negative stories, see how the stock's down in free market. These negative stories can cause Lam to have a lower price this week and next week. I'm going to be buying shares. When would I sell Lam Research? This one here, if it reached like 10% overpriced, I'd probably sell. These guys are not going to be like up and to the right. You see how they have semiconductor is cyclical. It goes up, comes down, goes up, comes down. So it'd probably go up, come down. So I'd probably be wise in, if anything, just selling some stock. If it reached maybe a stock price of 20%, this thing would go up to 96, and maybe if we got to like $105, $110 per share, I'd probably sell 25% of the stock shares and just take some of the gain. So that's when you asked about, Tomas. Any thoughts on it?
No, thank you. Okay, I'm going to keep buying. So let's see now.
So just remember that, so this is my investing approach. The thought that I would leave you with is some of these stocks don't go up forever, and you have to monitor it. It's like, maybe a year from now, if this thing's up at $110 a share and the numbers keep getting better, the fundamentals keep improving, no reason to sell. But if we're down the road a year and maybe there's some other big factors are beginning to be negative, okay, well, what do we do? In my case, I'd be like, there's a certain point where I need to exit. And sometimes I've exited too early. Sometimes I've exited really in good timing, but probably harder. Sometimes I would think that selling a stock is, that decision is harder than buying it, because you can see discounts on stocks. You see it kind of coming together. Okay, you buy. And then when you're up on a stock, you're like, well, do I sell it or do I keep it forever? It's like, so, but this one here, Lam, I would say is the type of stock in an industry that I would consider selling it once it reached a certain price target. I'd be like, okay, $110 a share. I'd probably sell a good portion of my shares, unless the news keeps getting better on the stock. Like, oh man, we're experiencing even better growth and more cash and better profitability. That would cause me to keep it. So Scott,
you don't see it as a stock I could sleep on, like to keep it and not watching it for many years. So maybe in a few months I should take a look and analyze it again.
So every quarter, got to look at your stock, right? Especially after their earnings. Now, is it a stock that you can own for the next 10 years? Potentially, yes, maybe. But if you see the stock really rise and the fundamentals maybe are beginning to look not as good, there's less confidence in them. There's nothing wrong. There's nothing wrong with taking a gain after a certain point in time, in my book, because I've had stocks that fly up and then they come down. I'm like, geez, I should have sold back a year ago. I kind of felt that it was not going to be as good going forward, so I need to act on it in some cases. Okay, so every quarter, look at it. If you continue to be confident in the company, no reason to sell. If you begin to think, wow, the stock price is really high, the economy is really not working for these guys as good anymore, taking a gain's there's nothing wrong with it.
All right. Thank you, Victor.
Okay. So then we got KLA. This is, yeah. So this is a competitor, okay, and they're in the semiconductor space, where I would say they're in the ecosystem. They may not be like a perfect, like ASML and Lam. They're not perfect competitors. They kind of like, in some spaces they might be competitors, but they actually are just part of the same ecosystem. So these guys, for the 1 year, it's been a lot of volatility. The stock reached 900. It's down to 738, but it got down as low as 614. Wow. 17% year to date. Beautiful. That looks good. So these guys have been going up and down, and these guys are affected like ASML and Lam. $98.7 billion market cap, 10.85 billion in revenue, forward P of 23 to buy according to analysts, a little bit discounted. As we look at their growth looks good. Wow, accelerated growth. Look at that, 23.7%. So here they hit a contraction period. They started to grow. Looks good. When did they announce? They announced on the 30th, which was Thursday. So the growth looks great. Free cash flow looks good. It's been growing. Looks very good. And margins look good. Okay. So this stock seems fairly priced. At that free cash flow rate, if I multiplied it times 30, you'd get to around 100 million. Their total debt is not a big problem. They have a lot of cash. They have some debt. They have net debt of 2 billion. Not a big deal. And I think these guys are fairly priced. I can't argue with the analyst saying, hey, it's discounted by 12%. I'd probably be at a fairly priced level. And this volatility, holy smokes, why is this stock so volatile? News really affects the stock. Huh. Interesting. It's had a very nice rise recently, and I think it's fairly priced. But one thing that is good to know as a Lam Research investor, and if you're an ASML investor, all three are moving to the upside in the 2025 year. So that bodes well for the ecosystem, I guess. So that's KLA. All right, so we went over Lam. Let's go over PAGS.
Thanks, Victor.
Yeah, you're welcome. So this is PagSeguro, together with its subs, engages in the provision of financial and payment solutions for consumers, individual entrepreneurs, micro merchants. So payment systems in Brazil and internationally. This is a small cap, 2.3 billion. Revenue is nice and high. Over the 1 year, it's really dropped. Year to date, it's up 19%. Wow, that's great. 1 month, 20%. Very good. So the forward PE is super low, 6. It's discounted by 80%. So when did they announce? Have they announced? February 26th. So we're 3.5 weeks from that event. So it's around the corner. Go for it, Scott.
Oh, Victor, by the way, if you want a fun graph, take a look at KLA, or not Tencor, sorry, but KLA Corporation graph for their entire life, because it was somewhat flat until, let's say, about 4 or 5 years ago. And then it just started. But I think that's just the AI boom, right?
Mm-hmm.
Because it just went up like a rocket, basically, with NVIDIA.
Incredible. So PagSeguro revenue has been expanding. That's a very good sign. That's a very optimistic sign. You see that their revenue, revenue growth is not like in early years when you're tiny. Yeah, you're going to grow at very large amounts because you're so small. But for them, they're pretty good size now, and they're growing at a very good clip. Very good. So revenue is accelerating. That looks good. So free cash flow went negative after being positive. And we're going to look at the quarterly there. Gross margins are good. Okay. So they've had negative cash. They're growing. That's good. What's going on in that cash? What is causing them? So they are profitable. Depreciation gets added back. and some negative items here. Changing accounts receivable. So they're growing the amount of accounts receivable they have from their customers. So that is a risk item. It's like, what if their customers go bankrupt and they can't pay them? So that's a risk item. And it's been eating away at their free cash flow. They need to get that down. So that would be the one note as a stockholder is got to manage. I got to watch that. They're going to announce in 3.5 weeks. That's a line that I need to watch. If it goes to a positive, very good news. If it continues to show negative, that's not good. Because that means more of their customers owe them money. And if a good number of those customers go bankrupt, can't pay, don't want to pay, it's going to hurt them. So got to watch that line. That's the number one line that's affecting their cash flow. Okay. Everything else looks okay. So you got it. This is a homework item. On the earnings, you got to be all over this and bring this stock up when they do their earnings, Tomas. We'll take a look at it and we'll examine what the heck's going on with this accounts receivable. On the earnings call, somebody should ask that. Hey, what are you going to do about this increasing accounts receivable balance? Are you concerned that people aren't going to pay you back? The stock's working. It's going up for good reason. It's growing its revenue. That's very good.
All right. I will try to dig into that. So maybe we can have some answers.
Yeah. And even if it went flat, okay, well, it didn't go up or down. That's good news. Because they are growing their business, which means that they're getting more customers. So those customers have terms, so they owe them, accounts receivable. So, okay, I'm accepting of it to some level, but not to the point where it takes you to a cash negative position. And I want to see some sense of, okay, that number needs to go down. These customers need to pay you, and then your cash flow should really start flourishing. That'd be one homework item that's important on that. These guys, analysts, 12 of them cover it. They're very optimistic. Wow. Worst case scenario is not that bad. Average, it should go up substantially. When we look at their stock, over the 5-year, boy, they were really valuable back in 21. The stock was really valuable as of August, and it's really dropped, but now it's beginning to go. Look at even there, it doesn't give us the full picture. When we look at from really the last month, it's really working. Very good timing. What's the timing of your buy on this thing? When did you buy?
I bought at the end of December.
Nice.
Yeah.
Tomas,
the same, yeah.
the stock picker extraordinaire. Good job. So this one here, the homework on it is you got to keep track of this accounts. The revenue looked great. Profit good. Margins good. Balance sheet fine. Accounts receivable. Guys, what are you doing about this? You can't continue to grow your accounts receivable this fast. At some point, that's going to become a huge concern. So we got to see that go down. All right. So that's tags.
Thanks, Victor.
Yeah, you're welcome. My pleasure. That's, these are the kind of businesses, man. If these guys turn into the next StoneCo, which StoneCo for a while was just ridiculous returns, to the upside, or PayPal, or that kind of thing, man, these guys could really, really reward. And it's a low stock price, so it could double in a year, and you'd be sitting pretty. When would you sell this? You have to really watch the stock for bad news or concerns. Okay. And this is a risky stock. What would I do? This isn't advice to you, but man, if I doubled my money or tripled my money, I'd have to really think hard about selling it and selling at least half of it, because this is the type of stock that StoneCo, it went up really nice and then it came down. I still made money on it, but I could have made a lot more money if I sold at the right time. See
So
this? Oh my God.
The chart from PayPal and PagSeguro are very similar, and they only get different in the last month. I don't know, maybe it's the same story with StoneCo.
Yeah, you're right. Yeah, and see how this stock here,
Yeah, the same with StoneCo.
if you bought at the right time, this thing just took off 400%. So even the investor that said, "Oh, okay, I'm out. I'm out at 40," and then they saw the stock go up, and you're like, "Oh no, I missed out." And then they're like, they visit the stock again. They're like, "Oh, okay, no problem. I'm not sad that I sold it anymore because it really came down." This can happen again, right? You have these companies are high growth companies, and it could be. I just don't feel like these stocks are. They're not going to be like Meta or Apple. They just keep going up. No, they're going to have periods of time when they do really well, and then they're going to have periods of time when they do terrible. And look, they're kind of trading right with each other, right? See that? So that's really cool. So your exit strategy, you don't need to worry about it now, but hopefully, I'm hoping you have this good problem. A year from now, you've doubled your money, and you're like, what do I do? Okay. So that's when you need to think about, okay, do you still have a very optimistic view of the stock? It's going to keep growing. Okay, cool. You can keep it. Do you sell 25% of it and say, okay, a win's a win? Now I'm kind of playing with the house's money. I got all my investment back, and all the stock that remains is pretty much for free. That might be what you do, but we're getting ahead of ourselves. Let's wait for that good problem. Hopefully that problem lands on your shore where you're like, oh, this stock's now trading, and for the case of PagSeguro, it's trading at $15 a share. What do I do now? Okay, well, you'll need to make a few decisions, and not changing your position is a decision. It's a passive decision, but I hope you have that problem. Okay.
I hope so too.
Yeah. All right. So let's talk about American Express. This has been a stock in Warren Buffett's portfolio for like ever. So American Express over the 1 year has worked. Look at that, 55%. Nicely done. And even the 5-year, man, looks great. For a while, it was kind of flat, but not anymore. It's done really well. Market cap, 222 billion, revenue 60. And Visa and MasterCard reported very good reports. Analysts think this American Express is priced at a premium. They have a 20 PE. Their revenue, very good revenue growth, 9.3%. They have a big number. Let's see here, total revenue, 60 billion. I mean, that's a big number. So that's very good growth. Go American Express. So their free cash flow, very good free cash flow, and profit margins, good profit margin. I don't think they're showing me a gross margin number, but that's a good profit number, 16.4, very good profit. So 17 billion, they're growing at 9%. I mean, I could argue this is a discounted stock. They have very good cash. A lot of cash, 10 billion of debt. Yeah. I mean, this thing is probably like 20-30% discounted on cash, free cash flow. And what are analysts expecting out of growth? So analysts expect it to keep growing. Yeah, this is a good solid value stock. This thing is, I don't expect it to go down. And these American Express, Visa, MasterCard, they just keep going up and to the right, very consistent. These guys, so based on free earnings per share, analysts think it's a little pricey because it has had a good year, but it's kind of deserved, right? Good revenue growth, good profitability, good free cash. Warren Buffett owns it, low dividend. So you really want to see this stock appreciate, continue to appreciate. If we have a downturn in the economy, especially the higher end consumer uses American Express as well as businesses, and those services, I mean, for the last 2 years, right? Stocks have been doing great. Companies have been really profitable. So American Express is doing great. So if we have a downturn in the economy, these guys will take a hit. I'm not expecting that in 2025. So this one isn't a bad value play, good value stock investment. Let's take a look at in a chart. And compare it to Visa and MasterCard. So these stocks have traded together, but American Express has won the battle of the charge card, credit card business. Look at that. What a beautiful chart. Oof, very nice. Over the 5-year, American Express wins that battle. So American Express is where the money is at. I guess this Warren Buffett guy really knows what he's doing. Very good looking stock.
Victor,
What do you
Victor,
think? Huh?
I have a question. I see, I mean, now that you brought up all the three companies that, you know, talking heads and people, YouTubers are saying that there is concerns that all these businesses will get impacted or affected negatively because of the crypto, and the transaction will start to be, the crypto will eat the lunch
Mhm.
to some degree. I don't know. What do you think?
I also have concerns about this space, but not necessarily because of crypto. One of my concerns around American Express, Visa, MasterCard is you think about Amazon, right? You know how like Federal Express, their stock tanked because Amazon said, hey, we're going to do more of our deliveries. And half of the volumes that American Express was doing with Amazon are going away in 2025. That's huge. Like, wow, we just lost a lot of business. So when we look at payment systems, Amazon. So when somebody uses a Visa, Visa gets a piece of that. Traditionally, it's been 3%. But I'm sure Amazon says, no, you're not going to charge me 3%. We're so big, you're going to charge me 1% because we have that type of leverage, right? If you don't work with us, we'll just accept MasterCard or we'll accept, something else.
I want
Now-
to comment, Victor. I think that there is misunderstanding. The 3% is not cut by Visa, by the company. It's cut by the issuer, by the bank. Visa
Yeah.
itself get much less. I don't know how much, but it's
I
small
agree.
portion. Yeah, go. Sorry. Yeah.
So I'm trying to keep it simple. I agree with you. If JP Morgan issued out that credit card, JP Morgan and Visa split that traditional 3%. I agree with you. And they offer, so I agree with you. But the point is still the same point, which is, okay, so Amazon, what if Amazon at some point said, like my household, hey, Victor and wife, you guys, I don't know how much money we spend on Amazon. It's tens of thousands, right? If you just link your bank directly to Amazon Prime, we're going to give you 0.5% back. Whoa, wait, what? Yeah, I'm on board. How do I do it? Done. That's one of the risk items, right? That's easily done. No crypto involved. I just link my bank. I know Amazon. No problem. I have a lot of my vendors linked that way. Like my wife has a business. Most of her business transactions, like ordinary bills, they get paid automatically. Well, why couldn't I just have the same thing with Amazon, where they just debit my checking account? Done. They're happy. They lowered the cost of doing business because they don't have Visa in the mix or American Express or MasterCard. And how much volume is that, right? Amazon's $600 billion of revenue. Walmart, another big retailer. If Amazon did that, yeah, Scott, great seeing you. Take care. So if Walmart did something similar, I think that's the future. Because why do you need Visa, American Express, and MasterCard? This paradigm was created way back in the day when, the 1960s. We didn't have internet. We didn't have anything like it. So people would show up with a charge card and they would charge things, and it had this, you remember Nkiter, you'd have this like device and you put your card down, you put a piece of paper over it, they'd run a roller over it, and then they'd have an imprint of a
Yes.
charge card.
Yeah.
That was the model. That's the model that we're trying to use today. You have a credit card, it has a number, and it's the same paradigm. Paradigms go away. And when that paradigm goes under attack, the other thing that's attacking it is buy now, pay later. These companies like PayPal, and I forgot the other one, they're offering for big ticket items. Hey, you buy that television, you buy now, pay later. It's a pre-organized cost to the merchant. So you're Costco and you say, buy now, pay later. I know that on a $2,000 TV, I'm going to get the money right away, but I'm going to give up 0.5%. And that 0.5% is what PayPal, or I forgot the other company's name, they get that money and then they have the relationship with the person that needs to pay them. That's a threat. to American Express, Visa, MasterCard. So those things, as we go into e-commerce and we get further into e-commerce, their value, Visa, MasterCard, American Express, their value goes down. They're not, just not needed. They're not a necessity anymore. So that's the biggest risk that I see in the space. So far, that hasn't been a problem. Just ask American Express stockholders. So that's like a big picture thought that I have. But to this point, it's kind of like whatever. It's the stocks have done really well. Are you thinking of investing into American Express? Or are you an investor?
I'm an investor in American Express since.
Good for you.
Yeah, actually, what, more than 2 years, 2.5.
Good for you.
Yeah, I have it. I mean, it's double since May 22. Yeah.
Good job. Nicely done. All right, cool. So that wraps it up. It's been a good investor call. I think we went over some good stocks. As we enter this week, we have earnings, big ones coming up. Tomorrow, Palantir is going to be the big name. They're after the close, so that'll get a lot of attention. We have some smaller names, some semiconductors, Tyson Foods, Clorox. Then I think Tuesday's big. Google, Merck, Pepsi, AMD, Pfizer. Oh man, this will be a really cool day. I'll probably live stream on Tuesday evening and cover this. Wednesday, Novo Nordisk, Toyota, Alibaba. These guys have been doing really well recently. Qualcomm, ARM. These guys didn't exist, and look at that. Now they're 157 billion because they help in the design process of semiconductors. Uber, PayPal, nice. Thursday, Amazon, Eli Lilly. Very interesting to see what's going on. This stock has seen a pullback. We'll see if they start rallying again. Philip Morris, Bristol Myers, looks good. Then on Friday, kind of a light day. Some smaller companies. Edwards Life Sciences, they're in the healthcare space. This is going to be a big week again. And mixed in with a little bit of concerning news around, tariffs, the economy and stuff. So we'll see how that affects. Wow. Well, I don't know if this is correct, but man, markets are supposed to rise. No, here we go. At this point, markets might drop a little bit. Crypto is kind of telegraphing tomorrow's open because this is open 24/7. It never closes. So this is real-time trades, real-time investing and selling. So I think we're going to open lower tomorrow. All right, gentlemen. I hope you guys enjoy the rest of your Sunday. Thanks for tuning in, and we'll talk with you soon.